Hello again, everybody. Harry Boxer, the technical trader at TechTrader.com. It's Wednesday, March the 27th. Well, today was definitely turnaround Tuesday to the downside. After a big rally yesterday and a little bit of a follow through right at the opening, the market then started to drift down lower. Notice when they hit the 50-period moving average, they bounced nicely. At that point, the S&P, which had held at 50 as well, made a new high. Notice that the new high was not confirmed by the NDX. At that point, I indicated potentially a negative divergence. When they came down and formed bear flags here and formed a rising wedge there on the S&P 500, they were very telltale. Now, I didn't think we were going to drop from 6740 to 6480, 260 points. I didn't think the S&P is going to go from 2671 down to 2595, but it did. And it was a dramatic drop. And looking at the implications of what it looks like on the hourly charts, you'll see that we came down in a 5-wave decline. I had that rally right back to resistance at the declining top line as well, and the NASDAQ 100 anyway, near the 50-period moving average, and then the rollover, which happens to be right near here, this pullback low. If we do not hold this tomorrow, 64.1020 and all the way down to 6300 are all possibilities if we get a follow-through cascade waterfall decline, like we did here, for example, which could set up a much bigger snapback. But it's looking pretty bad, folks. I haven't seen the kind of charts I saw today individually and intraday in a long time. The S&P, you can see almost a head and shoulder, but the rollover broke support right about here, and that was the key level. Tried to rally, rolled over, noticed the moving averages crossing over, and then the heavy-duty rollover at the end of the day. On the hourly chart for the S&P, we rallied right back to the moving average, right back to the 50-period, the red line, and lateral price resistance, and came down. I was looking for a retest anyway towards 2640, maybe 30, but for this to plunge all the way down to 2595, it's quite steep and potentially ominous based on what I saw today. Now, I also want to go over some of the oscillators and indicators. The McClellan oscillator is not dramatically oversold. Why? Because the advanced declines in up-down volume until late in the day didn't look that bad. So you can see that although it was a bearish engulfing day, and we're likely to go lower, perhaps I'm looking for a test of about minus 200 to 240 at least to get a much better rally going. The VIX also spiked in a bit and then pulled back and reversed a bit today. This is a reversal bar, but not dramatically so. And what I'll be watching for on the VIX, if we get above 26 and a quarter, right above here, across these three bars, this could explode and take the UVXY TVIX with it. The TVIX looks like this. The falling wedge, 3-wave corrective, and then the breakout with a little bit of a stall inside day yesterday was reversed today. I'll be watching TVIX over 11/18/20 tomorrow. You get over that, you're looking at 14/15 quickly. The UVXY, if you prefer, the big falling wedge popped out from about the 13.5 range up to 20. There's resistance in the 21 area, give or take a quarter, and then we're looking at 24 and 28. So keep your eyes on this going forward. I've been talking about putting protection on literally every day. You can see the OBV's moved up nicely, way ahead of price. That's a positive divergence in technicals, and the UVXY as well as the TVIX, which pretty much going vertical here, tells me this is still going higher and the market may take it on the chin here. A few stocks that did look good today, DVAX, multi-month high, as it popped 70 cents at 3.65% and did a yeoman's job of hanging in there today. Keep an eye on that one. Again, anything that's looking strong in the down market usually does very well when the market turns. Put this on your watch list for down the road maybe. ENPH popped out, got up to the top of that little channel and backed off, but net it was still up on the day. QHC similarly ran up, closing at the high for the day up 60 cents or almost 8%. That one looks like a $9.50 stock. And RYAM, which we day traded, broke out of a wedge today. Might very well see some more upside, but it did reach a 3.5 year high. It might have a run now at the 24 zone. Tandem diabetes, wow, that really has done well for us, and you can see that we're looking at the daily chart, the base, the breakout, the consolidation. Today was a big day as it broke out across resistance volume, picked up to 3 million. That's a big day for that stock. And obviously in a good, bad market, there may be pressure on it, but it's something to accumulate if you see a pullback. I think it's going to see 5 3/4 and 7. A quick look at the box of shorts now. There's a lot of them. I want to start off with Tesla, and I'll do it for a reason. Take a look at this. Today's breakdown of Tesla breaks down multiple lows going back a year, and is right now near the major rising trend line right there. Any further damage, and you're looking at 235.40 on the stock. Be careful. As a matter of fact, if it snaps back towards 293 and it does it on low volume or forms a bear flag in there, it may very well be a short. Other shorts of note in our room: AEIS extended with an engulfing bearish part today, down 326 or 5%. That one looks like it's headed for 56 and 50. ALB, been looking at this one as a short from the 115.60 range. It's made it down to 90. At this point, it wouldn't shock me to see 85 and then 75. BITA really getting whacked down here. This box of short has worked out very well. It's now rolled over from about 38.9 range to 20, nearly cut in half just since January. And from the high of 52, 54 range, it's really got whacked. There's some support down here in the 16.5, 17.5 range. I suspect that might be a place to cover your short for sure. EBIX imploding, took out a head and shoulders neckline today. This one looks like we're headed to 66 and 60. And TRI, miserable looking, continues to drop down, took out support recently here. I think we're headed to 24. Overstock got creamed, down 667 or 15%, breaking support. I think this stock might be, before you know it, at 33, maybe as low as 26.7. We'll see. Dave & Buster's finally broke his wedge last week. It's become moving down steadily every day, looking for 37.5 at least on this move, and maybe much further down the road. You can see the long-term rollover type top. SMG broke its rising bear wedge, and it's coming down. Bounced yesterday, but it's coming back down today. First support 81, second support 73. SNHY right at the apex, might collapse at this point. Keep an eye on it. At the apex of a large wedge. The market cracks, and this one cracks. A quick retest of 50 may be warranted, and if it breaks 50, 45 is my target. Triton, TRTN, I've been watching this bear wedge form. It broke today, and how? And if this gets underneath 27 3/4, I'm looking for 25 and 22. TrueCar continues to look lower. I've been telling you that this is developing a large bear flag for a few months. It finally rolled over, took out the November lows. At this point, I would not be shocked to see a run into the 8 and 6.5 ranges. Tower Semi, a member of the weak semiconductor group, broke its flag, broke its support. I'm looking for 23.5 to 24.5 in this next move as the cascades lower down towards that area. Take Two really looked ugly today as another bearish engulfing bar, down 506 or 5%. This one might very well head quickly towards the 87 range. UCTT, another member of that semiconductor group, falling apart. 1, 2, 3, 4, fifth wave underway. Could take us to 15. And finally, Valsera also broke a massive top formation, snapped back to it, and is coming back down today, dropping a couple of percent. But if it breaks right here, a quick drop to 20 may be ensuing. That is about it, folks. It's not a pretty picture, but you got to do what you got to do to protect your positions. Good night, everybody.